Good morning, traders. Good morning, traders. Today we want to talk about first tips for improving candlestick trading with Fibonacci extensions. First tips for improving candlestick trading with Fibonacci extension. In this tutorial, I want to show traders how to combine the candlestick patterns with the Fibonacci extension 138.2%. All right. The 138.2% Fibonacci extension level is a very important Fibonacci key level that one should understand. All right. So for traders that are following us, we know that if a financial instrument is going down, for instance, all right, and it goes below the prior low, the next challenge for that bearish momentum is the 138.2% Fibonacci extension level. So after a financial instrument breaks below a prior low and continues to go down, if it fails to go below the 138.2% level, we are likely to see a reversal. This is a market stable data. One of the common trading mistakes that candlestick traders are making is that they are using their candlestick pattern in a void. So they see a bullish harami or a bearish harami, or they see a bullish engulfment or a bearish engulfment, and they just trade it. But when we are talking about a pattern, the most important thing that should come into our mind is the location. Where does the pattern form? All right. This is very important for us. So by using a market stable data, by using the 138.2% Fibonacci extension level, we will be able to use our candlestick pattern more efficiently. All right. So pay attention carefully. So talking about market stable data with the 138.2% Fibonacci extension level, you can see that the financial instrument at this point in time from a resistance level, this was a resistance before. So as the price rally up to that point, it found a resistance. Now it started coming down. Okay, so here it is, came down, boom, first move. Now we have this low here because the price started changing direction. So this is what I call the prior low. So whenever you see a financial instrument going down, one move down and start going up a bit, this is a low. So we apply Fibonacci extension to this prior price action here. All right. Price action, and we highlight the 138.2% Fibonacci extension level because the next challenge for that bearish momentum is this level here, $14.26. I'm using here HP Incorporation stock charts. I'm on the monthly chart. So as you can see, the price managed to break below that 138.2% level. Look at that. Look at that. They push it down because they want it to go below it too. Because they knew that if it stopped here, bullish trader will come in and start pushing the price up. All right, because it's a key level. There is usually a reversal at 138.2% Fibonacci extension level. So therefore, you can see how they were desperate to push it below that key level. Also, there was a support here, so they forced it through that particular amount to close below that level. Now, the bullish trader that are smart will be very careful because they know that it breaks below that level, and there is a high chance that we may see a continuation. All right. So, what I said to traders before is that there are two things that the price is doing all the time. All right. So, price breaks above a key level, it will try to retest it, and if you find a support, that's a bullish trading setup. All right. On the other hand, the price will break below a key support level, and if you find a resistance, that will constitute a bearish trading setup, and trader will use a top-down trading method to sell it. So as you can see here, the price went down to this point, forming this low. After it breaks below that low, the next challenge is 138.2% Fibonacci retracement level, which is a very important key level. So now the price breaks below that key level. Now it retests it here. At this retest point, you can look for a bearish candlestick pattern. And there was one here. You see this bullish candle and this bearish one with a bit of tail trying to retest the 138.2% Fibonacci retracement level. So here we have a bearish engulfment, okay, a bearish candlestick pattern that is formed at the point where the price breaks below the 138.2% Fibonacci extension level. This is a bearish trading setup. So what we can do as a conservative trader, so here it is, even close below the common set trend line. Here we will implement a top-down trading method. What you can do to control the risk is to highlight the high, the low, and the median line of this bearish candlestick bar. This one here, you have to highlight the high, the low, and the median line of that bearish candlestick bar. So you will be giving priority to bearish signal below the median line of that candlestick bar, best below the low of that bearish candlestick bar. So we have here, you see this bullish candle, and this bearish candle is forming a bearish candlestick pattern, not in the void, not anywhere else, okay, but at a specific price level where decisions are made below when the price was retesting the 138.2% Fibonacci extension level. So by combining the candlestick pattern with Fibonacci extension, especially the 138.2% Fibonacci extension level, here it is. If you want to apply a top-down trading method, here it is. It went down, yes or no. All right? Isn't it beautiful? So this is about this move from here to here. All right. What I'm going to do now, I'm going to remove my line. Stay with me, and I encourage you to watch the full length for this video, otherwise you're not going to understand everything. All right? So here we are. So now we see, so this price move, we apply Fibonacci extension to that. Price went below that 138.2% level, continue to go down. So, all right. Okay. So now, one more time, look at this. So when we're going to apply now Fibonacci extension to this price action. So it went down from here to here, yes or no, before it retests that 138.2% level. As it's going down, so we have this low here, yes or no. This is another prior low. The previous prior low was this one here. This is our new prior low. So as it breaks below that key level and retests it, we are selling it. We'll apply again Fibonacci extension to this one here. This price action. And which level are we watching? Again, 138.2% Fibonacci extension level. That's where it stopped, because this is a market stable data. If a financial instrument breaks below the prior low and continue to go down, there is a high chance it may find a support at 138.2% level. If it breaks below that 138.2% Fibonacci extension level, it means that we will likely to see a continuation as we did here. All right. So now we apply Fibonacci extension to this price action. Here, this is our new 138.2% level. What are we looking for? Candlestick pattern. This time we have a bullish candlestick pattern. A doji plus a bullish candles. Those two candlestick bar here are forming a bullish candlestick pattern, not anywhere else, not in the void, but at exactly 138.2% Fibonacci extension level. One more time, we'll highlight the high, the low, and the median line of the bullish candlestick bar, this one here. And we want to give priority to bullish signal above the median line. And we use a top-down trading method to trade it. Here it is, it's going up. All right. So now the price start going up. Okay, now we talk about it. Now this was in a downtrend. Let's see what's going on in an uptrend. Whether this strategy will help us to improve our candlestick trading instead of just knowing, because a lot of traders know about the candlestick pattern, but they are not making excellent decisions. All right. Practically speaking, you want to know how to use it. So price is going up again. Use your candlestick pattern with market stable data. Price going out from A to B. If the financial instrument breaks above the prior high, this is now a prior high. If it breaks above that prior high, before we were talking about prior low because we are in a downtrend, here it is, we are paying attention to the high in an uptrend, we are paying attention to the low in a downtrend. So now here it is, it went up from A to B. So we will say, all right, if it breaks above this high, the next challenge for that bullish momentum is which level? 138.2% Fibonacci extension level. This is about understanding the language of the price, what the price is doing all the time. So we will be watching this level now, which is the 138.2% Fibonacci extension level of this bullish price action here. Because it breaks above it, the next challenge is 138.2% level. You can see that we have a doji at that point. You see here, a hammer. This is a hammer exactly at 138.2% level, but we did not have a bearish candlestick bar. But if we have like a hammer plus a bearish candlestick bar here, that will constitute a bearish candlestick pattern. A hammer at a key resistance level plus a bearish candlestick bar, that's a bearish candlestick pattern. But we did not have a bearish candlestick bar here. But what the price did, the price breaks above, that 138.2% level. And here it is. Look at this candle here. Can you see that? A doji or a hammer, all right? You can call this a hammer or a doji, all right? Because the closing price is a little bit different from the opening price. So it's up to you, all right? So this candle here, you see the long tail. You can see also if you highlight the high and the low and the median line, you can see that the closing price is above the median line of this candlestick. They run above the median line of the range of this candlestick bar. And also that closing price is quite near the high of this candlestick bar. So we know that bullish candlesticks are closing near the high. Bearish candlestick bar are closing near the low. All right? But if the closing price is above the median line, it's bullish. If the closing price is quite close to the high, it's very bullish. So this is a bullish candlestick bar at 138.2% level. So what the price did, the price breaks above that level, retest it, and pierced through it. It went below that level, $15.52, and quickly went back up. So what has happened here? It's like a roundabout. Do you drive? So price went down. You look at this candle, and then quickly went back up. You do not need anybody else's permission. This is a reversal. The price changing direction. You just turn around, came down. Then you see a bearish candlestick with a long tail. You see here, and then it's closed above. Bearish candlestick bar, pierced through it, but closed above. That's a turnaround. So this candle, in fact, this candlestick bar, this bearish one, and this doji constitutes a bullish signal, all right, a bullish trading setup here. But conservative trader, we usually will say a hammer and a bullish candlestick bar, and then we trade this one only. So look for your candlestick pattern in the vicinity of 138.2% level, and to make excellent decisions. All right, if it breaks above and retest, look for bullish candlestick bar. If it breaks below, retest, look for bearish candlestick bar. If it just goes up, to that level, like here, it went up to 138.2% level and stop there, look for bearish candlestick pattern. If it just goes down to the 138.2% level and stop there, look for bullish candlestick pattern. As always, do not rush, draw your trend line and implement a top-down trading method. You can look for the candlestick pattern. I would prefer that they use weekly chart, at least monthly chart, even quarterly chart before switching to their lower time frame. I do not recommend very much the daily chart. You may use a 2-day chart, all right? 2-day chart, that would be better, or even 3-day chart, okay? So you see now, so I'm going to remove one more time this, and then we're going to look at another scenario right here, how to combine, the candlestick pattern with 138.2% Fibonacci extension level. This is about first tips to improving, all right, candlestick trading with Fibonacci extension. In this case, we are talking about the 138.2% Fibonacci extension level. Okay, one more example here. Well, here we are. So I'm going to move my lines a bit. Okay, this time, look here. Financial instrument went down, yes or no? So, what am I talking about from here? It went down to this point, yes or no? It did, yes or no? All right. Now, it rally up. It must start changing direction first. It must change direction first. So here it is, went down and it changed direction. We apply Fibonacci extension to this price action because this is our prior low now. Which level are we going to watch now? Our 138.2% level. Here it is. All right. That's our 138.2% level. Will you say that this is a bullish candlestick pattern? This bearish candle, long bearish candle, try to retest the 138.2% level, followed by a bullish candlestick bar that closed near the median line of the prior candlestick bar. So when you are comparing two candlestick bar, you need to, I will be talking about this in another tutorial, by the way. You want to highlight the high, the low, and the median line of the first candlestick bar, okay? And then you want to compare the closing price of the second candlestick bar to the median line. See, it closed above the median line of the first candlestick bar. So by comparing two candlestick bar, you want to see well. So this is again a turnaround, a bearish candlestick bar. Look at the push up. Okay, this is not happening. Okay, at any ordinary key level, but at 138.2% Fibonacci extension level. One more time, we will draw the high, the low, and the median line of this bullish candlestick bar, and we will give priority to bullish signal above the median line of that candlestick bar. If it goes above the high, it's becoming very, very bullish. And here it is. Again, a bullish candlestick pattern is taking place at 138.2% Fibonacci extension level. Here it is, it's going up. It's happening all the time. All right, if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about first tips for improving candlestick trading with Fibonacci extension. In this case, we are using the 138.2% Fibonacci extension level. If you want to know more about the 138.2% Fibonacci extension level, go to www.dayprotrader.com. Wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. If you have any comment or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. Happy trading to you all, and speak to you soon.